Ever wondered why your neighbor seems to be getting richer every day without even leaving his house? Well, the answer could be lurking in the intriguing world of the stock market, this bustling ecosystem of buyers and sellers, where fortunes are made and sometimes lost, is not just for the Wall Street elites. It's a playground where anyone can participate and potentially build wealth. We're here to demystify this thrilling financial arena in a fun, engaging, and digestible way. So buckle up for this roller coaster ride through Wall Street. Imagine owning a piece of Apple, or maybe Google. Sounds exciting, right? Now let's dive into the concept of stocks, and no, we're not talking about the ones in your grocery store. Think of it like owning a slice of a scrumptious apple pie, except this pie is a multi-billion-dollar company. When you buy a stock, you're essentially buying a piece of a company. You become a shareholder, or as we like to call it, a silent partner. You won't be attending board meetings or making executive decisions, but you'll have a stake in the company's success. Now imagine this. Your friend bakes the best apple pies in town. She decides to sell slices of her pies to raise money to buy a bigger oven and more ingredients. You buy a slice because you believe in her baking skills and see potential for growth. This is quite similar to how the stock market operates. Companies sell shares or slices to raise funds for expansion, research, or debt repayment. As an investor, you buy these shares hoping the company will grow and your investment will increase in value. But here's the twist. Just like the taste of the pie could change based on the apples used or the baking skills, a company's performance can fluctuate due to various factors like market trends, economic conditions, or company-specific events. If the company profits, you as a shareholder might receive dividends, which are like sweet financial cherries on top of your investment pie. But if the company doesn't perform well, the value of your shares may decrease. Remember, while the potential for profits can make investing in stocks seem like a tantalizing prospect, it also comes with risks. It's like baking a pie. Sometimes it turns out perfect, and other times it might just get a bit too crispy. So, investing in stocks is like being a silent partner in a business. You share in the profits but also the losses. It's an exhilarating ride, but always remember to buckle up and keep your eyes on the the prize. Ever lent money to a friend and got it back with interest? That's kind of how bonds work. Now, unlike the tumultuous world of stocks, bonds are like the steady, dependable friend who always has your back. Bonds, in the simplest of terms, are loans that you give to a company, a city, or even the government. In return for your loan, these entities promise to pay you back the full amount you lend, also known as the principal, after a certain period of time, known as the maturity date. But hey, your money isn't just sitting there, it's working for you. In the meantime, you'll also be receiving interest payments, often twice a year. Not too shabby, right? Now you might be thinking, wait a second, isn't this supposed to be about investing? I'm not a bank. Well, remember, investing isn't just about buying low and selling high, it's about putting your money to work. And bonds? They work like clockwork. But, like all things in life, bonds come with their own set of pros and cons. The good news is that bonds are generally considered to be safer than stocks. If a company goes belly up, bondholders are paid before stockholders. So, in the investment world, bonds are like the safety net under the high wire act of stocks. However, with lower risk comes lower returns. While stocks have the potential for high returns, bonds typically offer more modest but steady income. This makes them a great option for those who prefer a less heart-pounding investment experience. So, what's the takeaway here? If you're the kind of person who likes to know exactly what's coming, bonds might be your cup of tea. They offer a predictable income and are a safe bet in the often unpredictable world of investing. So, if stocks are like a roller coaster ride, bonds are more like a leisurely walk in the park. Sure, there's less thrill, but sometimes it's nice to enjoy the scenery without the fear of sudden drops, right? Scene script. Ready to play the high-stakes game? Welcome to the world of options and futures. Imagine you're at an amusement park. You see two roller coasters. The first one is steady, slow, and predictable. That's like investing in stocks and bonds. The second one is fast, thrilling, and stomach-churning. That's akin to trading options and futures. So what exactly are these exhilarating rides? Let's start with options. An option gives you, the investor, the right but not the obligation to buy or sell a stock at a specific price within a certain time frame. Think of it like an option to buy that fancy sports car you've been eyeing. If the car's price drops, you'll be thrilled that you have the option to buy it at a lower price. If the price skyrockets though, you can just walk away. No harm done. Other than a bit of a bruised ego maybe. Futures, on the other hand, are more like a promise. They're contracts that require you to buy or sell a certain asset at a set price, at a future date. It's as if you've promised to buy that sports car, no matter what the price does. If the price drops, you're a winner. But if it skyrockets, well, you're stuck paying the higher price. These high-speed roller coasters of the financial world can bring high returns. But remember, with greater potential returns come increased risks. The price of the underlying asset can swing wildly in unpredictable directions, and if you're not careful, you could end up losing more than you initially invested. But don't let that scare you off. Just like with any roller coaster, the key is to understand the ride before hopping on. Know your risk tolerance, do your research, and always have a plan. Remember, everyone loves the thrill of a high-speed roller coaster, but not everyone can stomach the drops. So, options and futures are like the adrenaline-pumping high-speed car races, high risk, high reward. Think the stock market is like a casino? Think again. Let's talk about a common misconception here. Many people see the stock market as a high-stakes game of chance, a roulette wheel where you place your bet and hope for the best. But let me tell you, it's far from that. The stock market is not about luck. It's about informed decisions, strategic planning, and understanding the market trends. Imagine you're in a casino. You put a chip on a number, the wheel spins, and boom. It's all up to Lady Luck. But the stock market, my friends, is not like spinning a roulette wheel. It's not about throwing darts in the dark or relying on a magic 8-ball. It's a game of strategy, not chance. In the stock market, you're not betting on a random outcome. You're investing in businesses. You're buying a piece of a company, a slice of their future profits. You're placing your faith in their potential to grow and succeed. And that decision should be based on research, not speculation. It's like playing chess. You don't randomly move your pieces hoping to checkmate your opponent. You analyze the board, understand your opponent's moves, and plan your strategy. Similarly, successful investing involves understanding the market trends, analyzing the company's financials, and making informed decisions. The importance of research cannot be overstated. You wouldn't buy a house without inspecting it first, right? Then why invest in a company without understanding its financial health, its business model, or the industry it operates in? And let's not forget about patience. Rome wasn't built in a day, and neither is a robust investment portfolio. It's about long-term growth, not quick wins. It's about sticking to your strategy, even when the market gets tough. So, it's time to dissolve this illusion of the stock market being a casino. It's not a place for reckless gambling, it's a platform for strategic investing. It's a field where knowledge, research, and patience can lead to substantial rewards. Remember, the stock market is not a casino. It's a game of chess, where strategy wins. So, ready to dive into the world of stock market investing? That's the spirit. Let's take a quick stroll down memory lane to revisit what we've learned today. We kicked off our journey by exploring the intriguing world of the stock market. Remember, when you buy a stock, you're essentially buying a small slice of a company. You're not just a customer anymore, you're an owner. How cool is that? Then we ventured into the realm of bonds, the safe bet. It's like lending money to your friend, but in this case, your friend is a corporation or government, and they pay you back with interest. Not a bad deal, huh? Next, we turned up the heat a bit and delved into options and futures. High stakes, high rewards. But remember, with great power comes great responsibility. It's important to know your limits and not to get carried away. We also debunked the myth that the stock market is a casino. It's not about luck, it's about making informed choices and strategic planning. It's about studying the market, understanding the trends, and making decisions based on solid information. So, next time you see your neighbor lounging in his backyard, remember, he might just be making his next big investment move. Now it's your turn to make yours. Had a blast with our stock market ride? We sure did. If you want more thrilling rides like this, smash the subscribe button and hit like button. Please share this with your loved ones. Remember, your engagement fuels our creativity. Subscribe, like, share, and ring the notification bell. We are building a community of stock market enthusiasts. Let's make investing and trading fun.